coming for futuristic. So we have to suggest not only the micro point, but macro issues also we have to see, and futuristic point also we have to see. So, like take example in the company law, we have seen there is a so many irrelevant baggage are going on. Shareholders approval for routine matter like declaration of dividend, issue of bonus shares, that is there, and people can give answer of these things. But now the board has a sufficient power. Board can do so. We can done away with various approval of shareholders, and board approval is sufficient. There are so many physical register system is still there. Duplication of various returns, which is a common information. The fear of criminalization of minor lapses, discouraging entrepreneur. Compliance cost is becoming very high because compliance cost is not high. Compliance of multiple things and multiple issues that is there. So small things become a negative concept, and something if SEBI or ministry is doing any penalty things or any investigation or inspection, and that is going to the through the LODR, you have to report to the stock exchange, then it's a always you are losing your market capitalization. So procedural also is still fragmented. Startup MSME spend disproportionate time and money on compliance instead of growth. That is another aspect. In the SEBI also, we have now SEBI laws. We have a SCRA. Then we have a SEBI law. And in the SEBI law, we have ICDR, LODR, PIT, SAST. And there are so many overlapping information, and there is some definition of word which are people always try to arbitrage that these words. So there is a time that we should have a one particular master law, and all other additional thing should be there. Additional disclosure should be there. So that is also one point. SME is one of the future for capital buildup, and the focusing more and more money to the SME market through IPO. It is really a good step, but no doubt certain things regulator has to check, and they should focus on how to create seamless capital access regime, because today if you are bringing out IPO, you have to prepare for 1 year. So it means that the 1 year preparation means this required too much effort. So sometimes people are also not focusing and going there. Fear of insider trading, rules paralyze genuine employee and transaction. We need to safe harbor and free clear trade. Recently, I came across one case where a professional who is giving consultancy to another chartered accountant, and he is taking and discussing with another person. So he is in between, and now what happened? There is just some charge with this another chartered accountant, and because the professional who is discussing with both the chartered accountant, they are one of the person is a director in any listed company. Now in the mobile number of these two gentlemen, those who have traded, his number is also there. So they are saying you have taken information from here and passed on to here without any trading by this professional. So the point is that some fear, no doubt, you can doubt, but sometime under this process, we must understand that this fear should not come in the business. Fear should come only for those who are doing something wrong. Fin influencer and social media investment advisor are unregulated, a risk for investor market that is also required. And friends, what happened? The Company Law Committee in 2022 came out, and they had discussed, recommended promoting greater ease of doing business, like various things, new concept, expedite corporate process, improve compliance, and remove ambiguity in existing provision. Some of these recommendations, particularly those required amendment to Companies Act 2020, are yet to be implemented. They have finalized. So what is the delay, and why it is delay when you have finalized it? In addition, there are some other areas that require attention in light of global and emerging issues. Similarly, there are need to revisit various SEBI regulations such as ICDR, LODR, PIT, SST to eliminate duplicacy and disclosure and further rationalize procedure, thereby promoting ease of doing business. That is also there. So ultimately, the call is that we should remove irrelevant law to be scrapped, that is a change in law. Procedure to be simplified and unified, that is the ease of doing business. Infrastructure and technology to be modernized, and it can meet out the present need. And then futuristic issue like AI, fintech, cross-border, ESG, how it can be useful, that is there that we should do. So friends, today we will discuss the same thing here. I have divided. First, I will take up the correlated corporate law, and then I will take up SEBI law. But before that, Mr. Sundaresan sir will speak on this, and I welcome Sundaresan sir for this program. He's our chief guest for today's webinar, and Mr. Sundaresan is has come to so many times, and he's very popular regulator. He was very popular regulator, and he has worked tremendously great job in SEBI. And recently, he has completed his 36 years in SEBI. And now the SEBI he had joined in 89 when it has formed. SEBI has formed in 88 when it was not recognized as a regulator. He is from that day, and he retired from this position in the month of July. So his journey reflects a rare combination of regulatory depth, policy innovation, and unwavering integrity. Rising from junior officer to executive director, his leadership has been pivotal in shaping SEBI's reputation as a global respected institution. Consistently rated as an outstanding performer, Mr. Sundaresan has led key reforms across primary and secondary market, surveillance, enforcement, and IT. His vision for SEBI is future ready, anchored in the data-driven supervision, technology adoption, investor protection, and ESG readiness. His career is a testament of regulatory clarity, institutional resilience, and people-first policy and positive attitude. He was the 8th employee from the SEBI first batch, having joined in 89 with a staff code number 11008, and he is the last member of that batch retired from SEBI on 30th June 2025. So he has done work in the technology. He has worked in the future things. He has worked on ESG also and various other things. So he has worked in various departments. So his wisdom of knowledge will definitely give a direction to all of us and direction to the government also to what changes are required. He has worked, he has realized, and then he can discuss this. So I welcome you, sir, for today's program as our chief guest. And after my presentation, Sundaresan sir will give his inaugural address. So then I welcome Amit Gupta. He's also practicing company secretary and insolvency professional. And Amit is very down to earth and grounded professional who has worked from a small company to a big company, advising on multiple things. His knowledge is also helpful. Then we have a Dhaval Soni, is a company secretary and compliance officer at Diadis Life Science, a company for under top 100 companies for market capitalization. Leading pharma companies in India. He is associated with this group since 2007. He has varied experience in various corporate restructuring, amongst other merger, demerger scheme of arrangement and acquisition of shares. I welcome Dhaval. You are coming first time, so we welcome you. Then I welcome Narayan Shankar. He's a former executive director, executive vice president or company secretary of Mahindra & Mahindra. He has been serving for 24 years since June 2001. A seasoned professional in corporate governance, legal and compliances matter. He has been played a pivotal role in strengthening the governance framework of Mahindra Group. And simultaneously, he is also part of various committee, and he's a part of our various webinar, giving knowledge, sharing information, and he's always ahead to give knowledge. Then we have Ankit Singhi, he's head corporate affairs of corporate professional, and Ravi Prakash, associate partner, security law of corporate professional. They both are working in the various corporate affairs, various clients, and they know what are the things has to change. So friends, before I should start the formal session of this, I just want to inform we have a next webinar on 26 September on empowering Indian firm, the future of multidisciplinary partnership, that is MDP. The recently Ministry of Corporate Affairs have come out the MDP concept note and asking suggestion from the industry, asking suggestion from the professional. So there will be opening opportunity for Indian firm to emerge as a global competitive players. And the webinar we will organize. So how the MDP can transform Indian professional services landscape and breaking various silos, and how the collaborative commerce can work for CA, CS, ICWA, lawyer, acquisition, IT professional, others, and make a big firm like, and then we can meet out the challenges of the world. So friends, before starting this, I'll just tell you the program structure that first Mr. Sundaresan sir will speak, and after that we will discuss on corporate law. And the corporate law we are dividing in the 4 parts. So first I will take what are the changes in law. I will ask all the participants, all the panelists. Then I will go to ease of doing business. Then I will discuss with infrastructural changes and then futuristic changes. So all the panelists will tell these points from their part, and Mr. Sundaresan, wherever he, because he is giving a tone of this particular webinar on how the reforms will take place. And the same replicator we will do for SEBI law related also in the 4 headings. And after that, we will compile it. So friends, now is a time to discuss and make the program in such a manner that tone of the program should be settled. So I'll request Sundaresan sir that he should share his wisdom, his experience, his knowledge, and his forward-looking approach in SEBI, always giving guidance to all of us and the SEBI also. Now it's turn of Mr. Sundaresan to tell us that what are the changes, what are the future, what are the ease of doing business, what are the things, infrastructural changes it can bring to do the ease of doing business, and the Prime Minister's concept can be fulfilled by this task force. Over to you, Sundaresan sir.
Good evening to everyone.
Good evening, sir.
Mr. Pawan, I am audible and
Yes,
also
sir.
visible, no?
Yes, sir. Yes, sir.
Okay.
Visible, audible.
Yes, sir. Thank you very much. And I also wish all other panelists who are, most of them are known to me because I have been part of this webinar for the last many years, which you have been very regularly conducting. And it's a privilege that to be here once again. And also, share the ideas on the topic which the webinars which you always conduct, chooses those topics which are very, very relevant for the day. And it has been, I have been, personally enriched a lot by attending this webinar, both as a speaker as well as a participant. And when I was in SEBI, I have got a lot of inputs from these seminars while, examining the various portions of the various regulations which we administer. So once again, I'm thankful to you for inviting me, and I am hopeful that this webinar also will help not only SEBI but also the forum which has been formed by the government to look into this, carrying out the reforms in the various laws to make the life of all the people much more easier than what it is today. Let me first begin that whether it is a corporate law or a securities law, in the last 25 years, what are the important developments which have taken place? First of all, we must accept that technology has completely changed when we were doing business in 2000 and what we are doing in 2025. So digitalization has completely taken the life very different from what we might have thought in 2020, that how 2000, how 2025 would have been. We did not expect that this many changes would come when we were facing this Y2K problem on the December 31st of 1999, when everybody was worried that all the computers will go away, the data will get erased, and somehow when 2000 dawned on the 1st of the 1st January, life was very comfortable. There was no problem. But then how the entire life has transformed in the last 25 years is very important. Now, when that has transformed so much in all our lives, let us see what happened in the securities market, whether the number, when you compare the number of listed companies or the market capitalization which was there in 2020, 25, though we have progressed, the numbers have gone up definitely. Some data which I got from the website that in 2000 we had about 5,500 odd companies, and today we have unique companies close to 6,000 in both NSE and BSE, and market capitalization has substantially increased. All these things have happened, and in the process, we have also got various legislative framework, like before that in 1956, when this Securities Contract Regulation Act was there, Companies Act was there, which was rewritten in 2013. Then SEBI Act came, Depositories Act came, Insolvency and the Bankruptcy Code came, then Competition Commission came. Recently, we have what you call NAFRA, which is playing a very important role in pertaining to the auditing profession. So many legislative frameworks have come. Technology has gone up. Now, the question which comes to my mind is whether ease of doing business has happened, or it has actually given more problem to the industry as well as to the administrators who are administrating the system. So my take on this is that definitely we could have done better in making the life of the people much easier than what it is today. Now, let me now tell me what are some of the pain points which, according to me, these legislative frameworks, that technology have actually thrown open to us, but we are grappling with that, and therefore there is a need to find solution to that. So what I feel is that very three important pain points where we need to focus when we talk about reforms. I am not talking about minor changes here and there, tweaking regulation number so and so or something like that, but at a very macro level, I want to say that there are three big, large areas where we need to focus our attention so that we can actually achieve the desired objective of ease of doing business. The first and foremost is that governance and investor protection. The second one is technology and innovation. And the third one is global, global integration and sustainability. So let me take 5 or 6 points in each of them, so that I will say where we feel that, where according to me we need sort of improvement in that. Now, as compared to, I'm just comparing between 2000 and 2025, because our Prime Minister has been telling that in 2047 we are supposed to be a developed country. So exactly it is about another 20 years from now, 22 years to be so precise. So whatever we have leapfrogged between 2000 and 2025, we need to leapfrog much faster than the phase at which we travel, because then only we will be able to achieve the desired objective in 2047. So the first one, if you talk about governance, today I find there is complex structures are made. There are layered subsidiaries, there are foreign subsidiaries, offshore vehicles, multiple trusts created. Now, these are all created with an intent of what? Whether these structures have been created to avoid tax or to circumvent certain laws which are difficult to comply from the perspective of the industry. These things were done to avoid second other things, money laundering or to get into money laundering or something like that. So when we as a regulator see these type of multiple structures, there is a apprehension that somewhere the governance is laid down, whether the boards are equipped to understand these complex structures, whether the concept of independent directors whom we are trusting or expecting to perform in a very very significant role, as if they are the guardian of the complete stakeholders, as most of the majority of the Indian companies are family owned. So we feel that promoters will always have a what you call intention or a sort of inclination to divert the assets to their advantage rather than to the the other stakeholders. So we are expecting a very large playing conditions from the independent directors, whether they are able to, whether are they equipped to perform the role in these complex structures. Now, do we need to create these structures? If so, how these structures have to be regulated? What are the disclosures need to be made? Especially because of these multiple structures, what type of accounting entries are made. So these things are creating some sort of a peculiar problem which we have not envisaged maybe about 10 years back. Now, whether the technology is helping them to do this or there is a regulatory gap, and therefore we need to focus on this very importantly, because going forward, if governance standards are not improved substantially, the reputation of the not only the industry but country as a whole will have a lot of adverse impact. Then we all know what is the cascading effect. Cost of capital will go up. Then the investors will lose trust on that industry and all those things. Though the second aspect is, according to me, is on transparency. When we talk about these structures, the next issue comes is that what are the disclosures these corporates are making? Whether it is a periodical disclosures, one-time disclosures, when the transaction takes place. At one point of time, I most often say that in 2000, there was information asymmetry. Very few people were knowing, information. But today, it has completely changed to the other extreme, according to me, that is information overflow. We have information flowing from the corporate, from the social media, from influencers. You call them in any category, that the information is completely flowing. It's like that the way we are seeing unprecedented flexing India in the last few days, irrespective of the state you take, whether it is north or south or east or west. And it is difficult for the investor to understand which is the right information. Even before a particular information about a particular corporate has been absorbed, some other information contradicting to that emerges. Now, there is no time for the investor to evaluate what is the right information and what is the incorrect information and how to balance that. Therefore, the second aspect is how to ensure transparency by doing meaningful disclosures. Now, it's very easy to say meaningful disclosure. Now, what is meaningful? That is where the challenge is, that how are we going to achieve this desired transparency when it comes to making meaningful disclosures, not what you call dumping the market or the system with enormous information, whether it is relevant, irrelevant, or putting important things in a 20-page press release, and by the time you read the 15-page press release, you don't even remember what you have read in the page one. So we need to ensure that meaningful disclosures are made for the purpose of transparency, which leads to the next point of investor democracy, the third point. Now, today we have multiple Demat accounts. We have taught many people how to invest, how to get into the securities market, how to plan their, manage their money and all. But how they taught them how to govern those investments? What type of, what you call, how many of them come and work in the resolutions? how the minority shareholders are exercising their right. I don't think we have done enough in this, and therefore when we want to bring more and more investors into the system, because they are the only people who are going to supply this long-term capital over a period of time, and we are seeing that so much of money flowing either directly or indirectly through the mutual funds into the securities market. What is the minority shareholder voice which is going to be heard? Today, if you see some of the disclosures made on the number of people who have attended the meeting, number of people who have cast and all, they are all very, very minuscule. I mean, majority of the people don't even attend the meeting, and many of them don't even see the notice for the voting or something like that. Therefore, how to educate them from that point of view? Because these are all cultural changes to take place. It will not happen in a day or two or in 1 year's time, because the type of investor whom we are targeting is today is between 20 to 40 years. For them to understand this, and then because they have all gone through some sort of a pattern in their life. So we have to change their attitude, change their behavior. So it is going to be definitely a long-term, say 5 to 10 years type of reform where minority shareholders' voice have to be heard. Then we have never seen a single class action in Indian system. I do not know why. Whereas in US and other developed countries, if you want to call ourselves as a developed country in 2047, the voice has to be heard in multiple ways, not only from the point of view of voting, but class action suits have to come. Investors have to claim their rights. Today, whatever is given, the investors are taking. So they need to claim their rights, and they must know what are their rights. Then for all the because the third aspect on this is that investor democracy is that the institutions are playing a very important role, because now we are moving from, of course, it has been the SEBI's what you call the intent that retail investors preferably come through the institutional route rather than coming directly to the securities market. So when the institutions are given so much of prominence and importance to mobilize funds and channelize into the securities market, do they have stewardship codes? What type of role they are playing? Whether it is a portfolio manager, whether it is a mutual fund, now whether it is a private equity, all these institutional investors have to raise their bar, and then they have to demonstrate that the unit holders or interests are protected by raising their voice in the various meetings, and accordingly bring more investor democracy. Then proxy advisory firms are already doing their job, but I feel that there are better ways of doing it, and then they can also do very important aspects. Now, the next aspect, according to me, is on ease of doing business is that overlapping of too many regulations. As I said at the beginning, every 3 to 5 years, we are coming out with a new law for a different purpose. So in the last, between 2000 and 2025, the way the regulations are amended, even if you take a regulator like SEBI or insurance or regulatory authority or whoever it is, that there is a plethora of amendments made. So I feel that there is too much of regulatory overlap is there. There is a need to harmonize. Now, if you talk about a very big reform, let me raise a question that why do we have listed companies completely brought under the purview of SEBI instead of Companies Act administering something, MCA doing something? I mean, at one point of time, 20, 25 years, 30 years back, Controller of Capital Issues was administering the primary market. It was completely transformed, completely transferred to SEBI, and then today primary market is playing such a wonderful role. So similarly, can the company administration can also be brought under the SEBI Act, and those which are essential from the listed companies perspective, can the entire listed companies administration be brought under SEBI? So this is something, again, it is not a 6 months or 1 year job. There is bound to be a lot of friction among the various regulatory bodies, because no one likes to give up that turf, and therefore there is a big reform which I feel that make a lot of change from ease of doing business point of view. Now, just to give an example, that in 2020, the World Bank, rated India at number 63 for ease of doing business. Now, in my view, if you really want to achieve something in 2047, the desire of our Prime Minister as what do you call the developed economy, I think we have to come into within number 10. At least then only I can say that we have definitely achieved some sort of ease of doing business. Now, the next under this is about enforcement. Today, if you see whether it is investor resolution or enforcement of any wrongdoing, it takes a lot of time. Now, I'm not here to point out where the delay is, whether at the time of identifying the case, whether there is a delay, whether the investigation is taking more time, or post investigation, whatever is the procedural thing we have to follow, whether it is show cause notice, conduct of hearing, passing the order, further appeal, all these things are taking too much of time. Now, one of the biggest reform, I feel that enforcement has to be definitely made much faster than what it is today. Now, I just want to say we all know that justice delayed is justice denied. But in capital market, I want to say justice delayed is wealth destroyed. Because the complete the ability, because in capital market, in securities market, time is money. So if the time is lost, money is lost. So therefore, whether it is a judicial system, whether it is the existing laws, or whether the whistleblower policy we need to improve, or whether we need to bring some sort of a timeline for every stage. I mean, I'm not telling that where the delay is, but the delay occurs at every stage. Whether it is from the documents for inspection stage or at the time of appearing for the hearing, plethora of gaps are there, and everyone tries to game the system to their advantage and delay the process. And one of the best examples is this AGR dues. I mean, when this happened 20 years back or 25 years back, no telecom company ever thought that will create such type of liability. But the decision comes after so many years, and none of them have made any provision. And suddenly the liability is such that the companies are actually collapsing if they have to pay. So this is a very good example where the entire telecom industry is the one industry where in India it has been built so well, and we are able to do this type of webinars and all thanks to the telecom revolution we brought. But the telecom system, the entire system is in trouble because every telecom service provider is in trouble because of this AGR. So this type of thing should be avoided, and we need to ensure that the enforcement takes place much quicker than what it is today. Then, of course, as I already covered, the investor grievances also, because investors are the bedrock of the capital market or the securities market. They are the supply of capital they are doing. Therefore, their interest has to be provided, has to be taken care of, and the trust has to be sustained. Now, moving on to tech and innovation. As I said, the technology is changing the life very fast. So, whether we should have how do we do RegTech and SupTech for the purpose of monitoring the compliance, and at the same time, whether the companies can also adopt technology in ensuring compliance instead of doing manual, because going forward, it is not possible for anyone to comply, doing in a manual form, because the multiplicity of obligations, multiplicity of regulatory requirements, and the timelines which are given to comply also is getting reduced, because the argument from the regulator side is that technology is there. Why do you need so much of time? Why can't we crunch the time? That is why we moved from account period settlement to rolling settlement, then T+5. Now we are in T+1, and we are talking about T+0. So when time is getting crunched, the only way we can do is adopting technology for the purpose of compliance. Now the question is, when we adopt AI tools or a bot for ensuring compliance, somebody has to write the code for that. What is the ethical practices we have to ensure while developing that bot is very important. For example, tomorrow, suppose let us take the annual report is written by a bot, and it is getting published, and the board also approves it. And if there is a mistake in that, will you challenge, will you take action against the bot, or will you take action against the board which has approved it, or will you take action against the person who actually coded that bot into that bot? So these are all very important things which need to be discussed, and we have no choice but to adopt the bot over a period of time. There is no escape from that. When we conduct a seminar, maybe in 5 years down the line, it is going to happen. Nobody is going to sit and write the annual report. Everybody is going to use some sort of artificial intelligence or whatever name you call. But then, where is the responsibility going to be? Who is going to be held responsible if something goes wrong? Forget about that. What type of ethical practices you will imbibe into that coder who is going to develop that type of bot? So that is very important from the point of view of adopting the technology. Then comes whether filing, whether can we have single, what you call digital compliance portal. Today, what happens? Everybody has to file different things. Honestly, I mean, all of us who are, including the participants, I'm sure they will be filing income tax return in the new system or in the last few years. It has been made so simplified. I mean, over a period of time, if somebody has attempted to file the return, one can find over a period of time so much of simplicity has been brought in, and compliance with income tax by income tax department generating and giving you a lot of information to the taxpayer has made the life much easier than what it was 5 years or 10 years back. Can we do that in corporate life today? Because the compliance is done from different perspective, and different portals are there. Therefore, according to me, going forward, there has to be one digital platform where what you call disclosures can be made, compliance can be reported instead of today's fragmented system of reporting. And then yesterday or day before, there was a very good article by Mr. M.S. Sagu, was architect of the dematerialization exactly 30 years back. I don't know how many of you read that. So nicely he has written that how the India has adopted dematerialization when it was not even dreamt of 30 years back, because he was very happy to write that it is the September 1995 when this thought of dematerialization was conceived, and exactly 30 years have passed. Now, going forward, very good ideas he has given. Can we convert all the papers which we have today into demat mode? Whether it is an insurance policy, fixed deposit, so many things are there. I mean, there is a big list laundry list one can make, and he has specifically written all those things in the article. So I just wanted to say it's a very good proposal. In my view, going forward, paperless life has to be brought into, and then for that people have to be convinced. As it took almost 20 years to adopt this dematerialization, today nobody is willing to take any share or any security in physical form. That much of mindset has come. So in another 15, 20 years, whether we can completely change the mindset of the 70-75% of the population who are handling some savings or investment in the form of paper into a dematerialization mode. That is another thing I wanted to say. The third aspect is that because of this technology, innovation has to be given a lot of importance. Regulatory sandbox concept has to be brought in. Today it has been brought, it has been tried, but having been part of the system for a few years in the technology department, it was not successful at all. I don't think any regulator has succeeded in that. Therefore, one has to sit and definitely look into what was the pain points, why it did not take off, and someone has to come with a little bit of open mind, what you call sharing the data available to make regulatory sandbox more successful. One of the reasons what I found was the data was, what you call considered as very, secretive, or it should not be made public. Therefore, the data which is being available are not being used for the purpose of sandbox. So somehow I feel we have to overcome from that mindset that to some extent we have to build some guardrails and share the data with the innovator, and the sandbox concept have to be improved, and therefore the new methods can be brought in much faster than what it is today. No doubt the exchanges, depositories, and other major market participants in the system are building new things, but can it be done in a more organized way by encouraging regulatory sandbox? Then again, cyber security is another thing as far as technology is concerned, where as far as India is concerned, having been part of the system for more than 2.5 years, handling the technology department of SEBI, I can tell that cyber is not given that type of importance which is required to be given. Therefore, first the responsibility in the next few years is to inculcate how important it is. Then and then what is the measures we need to protect ourselves? Because the biggest risk, according to me, in any system is reputational risk. If there is a cyber attack, which is going to be, as they say, death and taxes are certain in this life, one's life. I want to say death, taxes, and cyber attack is going to be certain in everybody's life. Now, how do we protect ourselves? As an industry, as a system, as a country, is very important, and therefore, cyber security has to be given lot of importance in the technology revolution and ensure that we are protected, our data is protected than what it is today. Moving on to the third point, Mr. Pawan, I will take another 5 minutes only. The third is global integration and sustainability. You have already talked about that. Although it's a very what you call the correct word is that when we started 1992 and all, we talked about liberalization. We said that entire globe is one, but today countries are not willing to go for multilateral trade agreements. They want to do bilateral trade agreements. People want to become localization instead of going for multiple countries. But as a country like India, we need global capital. If we want to talk ourselves into a developed country in 2047, there is no second thought that without global capital, we cannot survive. Therefore, in order to attract that global capital, what we have to do is specifically that cross-border capital, how do we speak in the global language? We need to attract those investors, although a lot of efforts have been taken in the very recent past, attracting more people to come. But it's not a question of that coming. They're coming and staying here for a long period of time than what it is today. So we need that type of trust has to be created so that they remain here for a longer period of time. And therefore, in this, I will also refer to another article which appeared in Economic Times yesterday, that there is a tendency in India that we always think of small. Like, the example given was that 20 years back, for the purpose of taxation, the small cars are given concessions. Therefore, even today in the new GST, it is being considered that GST has been reduced in the small cars as compared to the big cars. So the article very clearly says that we should not think of small things. We should think of bigger things, because small things will only bring mediocrity. Whereas if you want to achieve excellence, which you want to achieve a revolution, we have to think big. And that is what even our Prime Minister says many a time, that whatever videos I have seen, he doesn't talk about what is to be done in the next 2 years or 3 years. He talks about 10 years or 20 years ahead of that. So when attracting the global capital, we need to think big. We should not again and again become, think small in our mind, and therefore think big and attracting the global capital. Then, while attracting global capital, very important thing is about ESG, because the way the climate change is taking place, and lot of importance was given few years back, lot of agreements were signed, but I don't know where it is going. But there has to be a proper long-term vision to ensure that sustainability is there, and for that whether rules have to be written or rules have to be withdrawn, I don't know. Because the more and more rules we write, more and more problem it creates, and therefore people are more interested in what you call diverting from that or non-compliance rather than ensuring compliance. So therefore, very important thing is that it is not only about the profit, but everybody should be made to think of the purpose as well, and accountability. So therefore, one has to greenwashing and all should be avoided. How do we ensure so that the sustainability is taken to a next level, and we all ensure that when we, give this globe 20 years down the line to the next generation, how good form, in a good form we can leave it for them is very important. So, and then the last which I want to say at the, at the overall system is that this I have been telling very public forums when I was in part of SEBI also, that it is time for every regulator, every lawmaker to move from rule-based to principle-based. Somehow, I feel that the more and more rules are written because of distrust. Now, if you, I mean, it's like a handshake. Both hands have to come together to make a noise. Therefore, if you have to trust the industry has to demonstrate proper, discipline and willingness to comply, so that principle-based we need to move on. The more and more rules are written, it is only going to create more and more complications. There will be multiple interpretations, and then it leads to wastage of time. But I feel principle-based regulation should be the norm going forward than an exception. So with this, I would like to complete my session. And as I told Mr. Pawan, I am available if at all any other discussion comes. If I have to share any of your thought, I will prompt, and with your permission, if you allow, I would like to share. Otherwise, I am glad to listen to others. And thank you very much once again.
Thank you very much, sir. The justice is denied mean justice is justice delays mean justice denied, which you have coined. Justice is delayed mean wealth destroyed. So that is a very interesting concept which you have suggested. And the cyber security also, death tax and cyber security attack will always come to you. And the most interesting point which he has suggested, that the globalization which was there, it is now becoming localization. And the way the globalization is taking shape, it will sink to localization. So you have to work out in this. The most important thing which you have told for today's webinar is think big. And sir, that is the when you think small, then always you will end up with a small thing. Always think big, and you will try to achieve that big. Otherwise, you cannot. So to achieve something great, you have to put line bigger than the small line which is you want to cross. So then you can do sustainability. And the last point which you have mentioned, rule-based versus principle-based, it is the crux of everything. Today we are making one law, and then again we are making to solve some problem another law, and then the arbitrage of laws and interpretation start, and nobody is winner except we lawyers. But ultimately, that is a myopic thinking of creating your own value. But until unless the value of the corporate increase, your value cannot increase. So thank you very much, sir. Your session was visionary, and you have suggested various important points of globalization, governance, technology, and globalization. Everything was relevant and important, and technological development is also. So, sir, what I'm doing, this session I am starting first with the company law. Wherever you want to say, you can just speak, sir. So now, Narayan, Ankit, Dhaval, Amit, I'm starting with company law. So first point is change in law. So Narayan, I will start with you.
Sure.
What changes in law and company law we should bring? We are not going for the micro, but major. The point is everybody should be very short. They should give point so we can collect something which you have to explain. We will come back to you and ask the clarification. The purpose of the webinar is collect maximum point, maximum direction, evolve it and submit it. So Narayan, I will start, then Amit, Dhaval and Amit, Ankit, they will say. So in the company law, what are the changes you think it is required?
Sure. Thank you, Bhavan, and pleasure, Sundareshan, hearing you. Specifically, the last point about changing from a rule-based, to a principle-based, which will be like you rightly said, if you are going to go as a developed country right now, and we are going in that direction, I think that will be a one thing which will be a great step towards that. In terms of company law, this one I'll just raise the points. I'm not going to get into too much details because others also have to speak. One is pave way for virtual AGM, EGM on a permanent basis. Postal ballot being replaced by e-voting, annual report for unlisted also. Because SEBI, if you are required, every time comes out with a circular. The last circular is on 31st December. I think MCA and at least they have now made amendments to LODR for virtual shareholders meeting, SEBI. I think MCA needs to permit virtual AGM, EGM on a permanent basis. Currently, it is exempted up to September 2025. Okay, and also provide exemption to entities from sending postal ballots to shareholders. Postal ballots may be substituted with remote e-voting. The second one, I thought, which SEBI had introduced, that in respect of an alternate dual voting mechanism for reappointment of independent directors, at least for listed entities. Actually, it had come originally, and thereafter they said that in case if the special resolution, the regulation 25(2)(a) of LODR provides that where a special resolution for appointment of independent director fails to get the requisite majority, because it's a special resolution, correct? Okay, and if the votes cast in favor exceed the votes cast again, and the votes cast by public shareholders again exceed the votes cast again, then the appointment of such an independent director shall be deemed to have been made under. Companies today are not able to take advantage of the dual voting mechanism, as Companies Act requires special resolution for reappointment, and the Companies Act right now does not provide for such dual voting mechanism. To enable this alternate mechanism in case of reappointment of IDs, I think SEBI has already written its recommendation to MCA to consider amendments in the Companies Act so as to incorporate the alternate mechanism for the purpose of reappointment, at least for listed entities. I think I'm sure MCA is in the process of considering, but this, like Sundareshan mentioned about inconsistency, there is inconsistency in the provision of Companies Act and SEBI LODR when it comes to appointment, reappointment, and removal of IDs. While there is this alternate mechanism in SEBI, I think it will go a long way if Companies Act also is amended in respect of the same. The second is more thinking big and completely different is the annual board evaluation. I think I would be hearing multiple directors every time, every year suggesting that this evaluation of the board, committees, individuals should be done away with compulsory on a year-to-year basis. So the one suggestion which had come even in one of the meetings which we had with the regulator was, can we do it once in 2 years or once in 3 years, correct? Because doing it every year, at least for companies where they are very clear that I am going to make myself clear, I will make myself clear to the chairman what is the requirement, correct? Anyway, independent directors have to have a meeting. They have once a year, they have to ensure that whatever is required from the management for them to take informed decisions, that they are getting it. And if not, they are taking it up with the chairman and others. Hence, annual board evaluation is something many directors have come that it's becoming a regular tick box, and can it be done once in 2 years? Then in terms of filing of forms, I think multiple forms like MGT6, which is beneficiary, correct? If 4 and 5 is filed by the investor, there is no need for the company to file that. Company on an average files more than 500, a big company. We can do away with, and there are minor things in that MGT6, including name in the register, that which can be done away with. The next point which I wanted to make a mention is vacation of directorship, vacation of office of director, which we say, Pawan, 167(1)(a) should be limited only to disqualification under 164(1). That is disqualification, which is on account of the director himself. Those which are vicarious liability of 164(2), like non-filing of annual financial statements, annual return, default in payment of interest principal amount, it is should recommended, need not be considered for disqualification. In fact, I remember some time back there was a CLC also which had recommended. Unfortunately, this has not come as a law yet, and I think it will go a long way to ensure that vicarious liabilities does not hit a director. And you know the whole lot number of suits which were filed in High Court, etc. in Delhi, all this can be done away with. Next, absolute exemption to wholly owned subsidiary from related party approval, both in 177 and 188. SEBI gives absolute exemption from approval for related party transaction from a holding company and WOS. There is diversion between Regulation 23 and 177 and 188. The provision exempts from the purview of audit committee only those being a holding company and it's wholly owned, which are in ordinary course, arm's length, and not entire thing. And if you want to bring uniformity or what we say alignment of SEBI regulation 177, 188, regulation 23 should all be on the same line and not different. Lot of companies are today also facing problem for preservation of the audio video recordings. Today, majority of the companies today are going for EV after COVID. I think this is one of the biggest thing which has happened. And in the rules, unfortunately, many companies are finding it difficult because of an interpretation. Because in the rules, unfortunately, the language used is at least before. They can just tweak the rules to say till the AGM, till the time the audit is done. It will really, really help. And we could also, as ICICI, we could suggest that we could create common standards for preservation of record as well as modality for destruction so that there is uniformity across all the companies as to till what time are you going to keep your recordings for and how are it is going to be preserved and destroyed, correct? Issue of shares on preferential basis, price range mentioned in the, there is many a time price range is mentioned in the valuation report. I think companies should be allowed to do preferential issue on the lower of the price range, correct? Similarly, definition of ESOPs. While ESOPs, GB, SAR, etc., by listed companies are governed by the under the SEBI SBEB. However, the Companies Act allows only ESOPs and not other variants of employee benefits like SARs, general employee benefit scheme, retirement benefit, and others, correct? It will really help if there is alignment with respect to that. There are other changes which is more procedural, which we can send it across separately. But very broadly, I will say these are the top things, 10 things which came to my mind for to start with. Thank you, Pawan.
Okay, thank you very much, Narayan. Thank you very much, Dhaval. Now your turn. So whatever Narayan said, so that we will not cover,
Yeah.
but other.
Okay.
Sir, I
Yeah.
will come to you at the last. So anything is left out from these people which you think in company law required, you please tell us. Dhaval, your point.
Yeah. So while we have spoken many things about the procedural things, there is a urgent need, I think, with regard to decriminalization of certain minor or procedural violations. Whenever there is some procedural lapse or minor technical things, then also certain provisions are there which talks about severe penalties or somewhere uh, criminal charges are being provided that requires to be decriminalized. I will share you in detail which provisions are there. Secondly, with regard to independent directors, Mr. Shankar talked about, there also what we have recently seen that whenever there are some non-compliance or some penalties or some notices are required to be issued, they have been issued to all the directors, including the independent directors. All these independent directors are not involved in the day-to-day operations of the company, and hence it is a urge to the regulators that they may be excluded from all these civil or criminal liabilities as far as their independence is concerned. Uh, Whenever there is a fraud pertaining to there is some fraud or some willful misstatement or some willful default, then the criminal charges may be levied, but not for other things. Mr. Shankar also talked about related party transactions. So that only one thing I would like to add is section 180, section 188, read with regulation 23 and regulation 37A. I will just quote one thing, that if a transaction between a listed entity and its wholly owned subsidiary falling under section 180, which speaks about transfer of an undertaking, it requires approval of shareholders if it is more than 20%. However, since this is a related party transaction, it it would be exempt from section 188. It would be also exempt from regulation 23. It will also be exempt under regulation 37A of the SEBI listing regulations, which speaks that if it is a transfer of an undertaking, then between a parent entity and a wholly owned subsidiary, then it would be exempt. However, Section 180 says that even though it is a related party transaction, then also approval of the shareholders would be required by of a special resolution. And one last point is with regard to which Mr. Shankar also spoke about, is the filings of various forms. So there is a need to integrate various annual forms. It can be integrated into one form, so that the annual forms like AOC 1, NGT 7, DPT 3, MSME, all these forms can be integrated into one form, and a timeline can be prescribed in which all this information can be submitted to the regulatory authorities.
Dhaval, thank you very much. I will come back to the second topic. Amit, your point of view. What are the major changes required?
Sir, thank you, sir. And I am just left with the 5 or 6 major points which are macro after what Shankar sir and Dhaval has covered. One macro point which I think we have been debating in this forum also for quite some time is a perspective in which the law has been created. The present law is designed primarily to protect the interest of various stakeholders. Whereas if we want Atmanirbhar Bharat, then the need of the hour is to draft the law to enable business. There are n number of classifications that the Companies Act has done in regard to different kind of companies, and different kind of legislative provisions are applicable to each one of them. We could continue. I can understand that there may be compulsion to continue these kind of classification. I am not against that. But the broad classification should be on one parameter, whether the public interest is there or not. If a public interest is there, put them into one basket. If public interest is not there, put them into the other basket. So law can be divided basis this broad parameter, so that it can be really ease of doing business, and it can reduce the unwanted litigation also. Because practically, if private limited company today has to seek exemption, it has to do rather more homework than the other company, because it has to read 470 section, rules made thereunder, then also read the exemption, and then try to understand what is the exemption. So really it is not making any benefit to the private limited company in terms of exemption. If really government wants, then this can be considered. Point number 2, the concept of dormant company was introduced in the Companies Act 2013. Now almost a decade has passed. Dormant company concept itself has remained dormant only. It has really never became active. Hardly, if we see with the data, hardly companies have adapted the concept of dormant company, because there is no clarity. My request is either this concept be revamped, overhauled, or this concept may be done away with. Similarly, the concept of Nidhi company, which was there in the 56 law, carried forward to 2013 law also. But a lot of goof up has been done, and government, I believe, has taken a stand that henceforth they will not go forward for registration or renewal of a Nidhi company. Be it as it may be, it is a policy decision. We are okay, but decide the fate. Whatever has to be done in respect of existing Nidhi companies, or whatever has to be done for future, so that we are clear that this company cannot function any longer, and professionals are also not trapped into the issues regarding the non-compliance and all, where they are not actually having any guilty mind with regard to the same. Fourth point, which deserves consideration, though very recently Ministry of Corporate Affairs has came out with a detailed notification claiming that relaxations have been given to the fast track merger to facilitate the ease of doing business. I really appreciate the way the government has considered the suggestions put forward by all of us. But one point is still which is paining to the industry is, which is a burning point, which is the requirement of majority of 9/10 in value of the creditor, of total creditor, not the one who are present and voting. So for a company which is small, which is wholly owned subsidiary, arranging these kind of majority votes, consent, I think is going to be a bigger challenge. Maybe you provide larger canvas ambit for the purpose of coming into 233 framework, but unless you provide the relaxation with regard to this, because nowadays the challenge is what? The challenge is that your operational boundaries are no longer valid. You are doing a global trade. Your traders, creditors may be located outside India. And we are expecting that they will come forward, they will understand our difficulties, and they will come and vote for us, or they will provide the consent. So it's little dichotomy there. I think government should reconsider its decision with regard to withholding of this relaxation, which was demanded from all the quarter. On the last point, I think government has came way beyond from the 56 Act, where entire Companies Act was filled with criminal prosecutions in respect of minor defaults also. When 2013 law was enacted, they made a distinction and they made it a civil offense. Majority of the offense, today 80% of the offenses are civil offense and they can be adjudicated. But the difference between the criminal offense and civil offense is now making a problem, that in respect of criminal offense, there was a 441 section where you can go for compounding. But in case of a civil offense, there is no concept of compounding. So suo motu application technically under 454 is not envisaged. And it has the other financial ramifications also. So if government is trying to decriminalize each and everything, they should come out with a clear mechanism where companies can on suo motu file the application. I will prefer not in form of a adjudication, but still I will prefer in form of a compounding. So 441 may be tweaked minorly to enable the filing of compounding application in respect of the adjudicatable offenses also. One last point which also comes to my mind, which deserves a consideration, though Shankar sir has touched that minorly, the pain with regard to the wholly owned subsidiary. Government need to consider, say a company, just imagine the pain of a company which has got 100 wholly owned subsidiary due to various commercial reasons. Every year it has to prepare annual report of 100 those subsidiaries. It has to do 100 odd compliances in respect of those 100 odd subsidiaries, which serves really no purpose because entire shares are controlled by the holding company. Can we do out of box thinking wherein we say all responsibility is casted on the holding company? Let holding company do all compliances and reporting. In any which case, they are consolidating account. In any which case, they are doing the other disclosures also from time to time. So if we can think over, really it will help the subsidiaries who are wholly owned and functioning just under the shadow of a holding company. There will be a lot of relaxation. I think I'll stop over here and as and
Thank you, Amit. Thank you very much. Giving a different view. Ankit Singhi.
most of the things have already been spoken. Some of my thoughts Amit has already deliberated. But I think when we are talking about ease of doing business, we have to.
No, not ease of doing business. We are talking about the change in law.
So just ease of doing business with changes will lead to ease of doing business. We have to stop treating everybody as equal. Like RBI, they have introduced a scale-based regulations for NBFCs where they have categorized the NBFCs into base layer, upper layer, middle layer. And for each category of NBFC, considering the exposure, the interest, public interest involved, the kind of lending they do, there are different set of regulations. As you go higher, the regulations become more stringent. Similarly, I think while there is a concept of small companies under the Companies Act, it has been hardly utilized in the right manner. There is still a lot of scope in terms of its utilization, in terms of the compliances. And lot many compliances are even a small private company with 1 lakh rupees capital and a large private company with 1,000 crore rupees capital are treated same in many cases under the Companies Act. I think that's the biggest change that we need to draw in terms of any regulatory revolution, if I say, under the act that we need to bring in, is to bring some sort of dissimilarities in terms of application of various provisions, considering the nature of the operation, size of the operations, and the public interest involved. If you see, majority of private companies have common shareholders, common directors. So even there is a need of annual general meeting is also not there, where both the directors are only the shareholders. What is the need to have even an annual general meeting at the end of the year? And if you see, the annual general meeting post this VC concept is actually just become a thing that one needs to do every year. I think the most easiest thing to do is to just hold an AGM on VC. The charm of holding an AGM, which was used to be earlier, has gone. So I am in no way in mandatory holding of AGM through VC. You should provide facility of VC, but there has to be a physical AGM. The charm of holding that AGM was still there. You can see the participation is going down. Number of queries that are being asked are mostly being to praise the management or some way secretarial departments of the organization. So one can understand what type of people who are speaking. So therefore, there is a need of bringing some change in terms of how laws should be applicable on different category of companies. Then there are some important things like Section 42. There is a provision of bringing simultaneous issues of securities. It's been introduced, I think, more than 3 years. But it was introduced at subject to conditions that the government will prescribe. These conditions are yet to be prescribed. It's been more than 3 years. I think government has completely forgotten that there is such rule that they prescribed. And that rule was prescribed based on the need of the industry that they can open simultaneous offers of different kind of securities. But while the provision is still there, nothing has been announced on the rules in terms of how to take that forward. Then wholly owned subsidiary, I think Amit has already touched upon. Warrants is also something very important. While ICDR talks about warrants very clearly in terms of how the warrants will be issued, what will be the payment formalities, Companies Act is completely silent. Companies are still issuing warrants in most of the cases following the similar format of ICDR, but nothing is there. Preferential offer talks about employee share purchase schemes, but have not laid down any provisions as to how those schemes should be rolled out, what should be the contours of those schemes. There is a word under preferential offer that preferential offer includes purchase of shares by employees through an employee share purchase scheme, but nothing has been outlined how this scheme will come, what kind of pricing will be there. Because if employees are being offered the same price at that would be the fair value, that there is no point of bringing an employee purchase scheme. You can do by way of preferential offer normally. So that is an important point. While there is an ESOPs, there can also be a way to remunerate the employees by directly allotting them shares at a discount. But there is no such provision, though the law talks about the hint. Then under the deposits, I believe there are a lot of clarities that needed in terms of transactions between companies, because there are a lot of different views as to transaction between two companies are still taken as deposits. Most of the companies treat that as they're exempt under the general exemption that is given. Some take a very different view. So we need to be very clear in terms of the deposits, that whether the money that is being moved from one company to another company will be treated as deposits. Another, I think, area where people tend to misutilize in a way is debentures under Section 186, under Section 185. 186, it talks about a minimum lending rate, but debentures being a security is out of that purview. Similarly, under 185, loans are covered, but debentures are not directly covered. So debentures can be issued to prohibited entities also. So there are a lot of things where there is a lot of issues which needs some look, but I believe ministry cannot be dealing across all of them together. Step by step they will move, but definitely this thing by way of some scale based kind of a regulation is very important. One of the very fundamental point is the additional fees on account of technical glitches on MCA portal. I think this everybody is continuously failing. If there is a period prescribed 30 days, 30 days till 11:59 in the midnight belongs to the company. If you are not allowing me to file a form up till that date due to technical glitches, then that's not my fault. I should not be made to pay an additional fees. That should be something which the government is very clearly aware of. They are fully aware of all these technical glitches, and unnecessary companies are forced to pay additional fees because of load related issues, because of version related issues. A lot of things are there. So that is something which we need to do. And I think lastly, SBO is still a myriad of provisions. Everybody is interpreting as his own whims and fancies. SEBI also rely on Companies Act in terms of how you disclose SBO. In case of subsidiaries, there is a concept of reporting a holding reporting company, how to disclose SBO in that case to SEBI. So SBO still remains unsolved puzzle. We need to be very clear in terms of what is the objective of SBO and how that needs to be dealt with. So these are the some key suggestions that I would like to present before you. Under that, if you see, I have a note of suggestions full with me, but we cannot discuss everything. But these are some of the areas where I feel that it's high time that we need to do something.
Ankit, you have to ultimately finalize this, so you add later on. Ravi,
Yeah.
you have 3 points. Please tell.
So one is that we lack an amendment tracking system for Indian regulators and in Indian legislative function. In the sense that if any amendment has come to a body of law, you get to see what amendment has come, but the rules, regulations, circulars that has to do something with a provision, they are not referred back to it. Maybe this will help the general people for whom the laws are made, and experts anyway find their way to, through commentaries or deep research. But I think for whom the law is made, they should be aware of how to navigate the laws, especially in the sectoral laws or special regulatory laws, being it RBI, as Ankit sir said and Amit sir said, these are myriad of provisions. Then something that SEBI has started is that they are uploading all the orders that are passed by different high courts, Supreme Court, or other statutory bodies on their website, which pertain to their domain, so that there is a semblance or people get to read what those important orders are that have a bearing on securities market laws. You would find orders of IBC uploaded, where there was a confluence between SEBI Act or any SEBI regulation or IBC. You would see orders on insider trading from Supreme Court, market manipulation orders, all sort of the orders. I'm talking about in addition to your own orders that you publish, you should also look for other orders that have a bearing on your subject. So that can be made in repository. Going paperless across the board is another suggestion. Dr. Sahu's article is really a thought-provoking article, which Sundaresan sir also referred. He has said that why not insurance and all other documents can also be paperless, not in the sense that they have to be made digitized, but entire fungible system as was implemented in case of dematerialization. Then what is really pinching is, apart from decriminalization or over-criminalization, at one point PIB had issued a report that more than 90% of cases filed by Ministry of Corporate Affairs were not involving serious lapses. Those were technical. And therefore, we saw the sweeping measures of decriminalization. But what is missing, and where we are missing the woods for the trees, is we are not applying the principles of proportionality, which is due to lack of training of the resource persons who are responsible for enforcement. I'll just give you a case in point. Regulation 6 of LODR for a listed entity requires appointment of CS, and if there is a vacancy, within 3 months you have to fill that vacancy. Vacancies is filled by a listed entity. Then there is some other form which is regarding the reconciliation report. In that form, XBRL, there is a radio button where you select yes or no in the change in company secretary. All the disclosures filed. That poor fellow did not select that option. Instead of yes, he selected no. Same penalty has been imposed by the exchanges. So the enforcers are not able to distinguish between a non-compliant entity and an entity or an error that has crept in, regardless of all reasonable and bona fide steps taken by people. So what my suggestion is, recently you know, Pawan sir, that BSE extended their AI to issuer companies and merchant bankers for checking their prospectus and offer documents before they file it. Why not the same system can be given to companies so that they can check their compliances by uploading onto the tool, whether they are proper? They ultimately aim behind the series of sweeping circulars issued by SEBI since 2016, the oldest one I remember, up to 2023-24, is that there should be a compliance culture, and exchanges are to monitor that. And therefore, you see, you get notices for delayed or non-compliances. Why not companies are facilitated so that they can check their docket before uploading, whether it is complete, what is missing, what could be there. So that is another suggestion. Pretty much that's it, sir.
Okay, thank you. Thank you very much.
Yes.
Sundarshan sir, you want to add anything in Companies Act? Paper. Okay. Now, the time is short, and what I'm doing, ease of doing business, infrastructure chain, futuristic. So I'll give 5 minutes to all. So you have to quickly bombard. Sir, you have any suggestion on Companies Act, sir?
No, sir.
Okay. Okay. So I will start with Dhaval first. Yeah, Dhaval. Ease of doing business, infrastructure change, futuristic change on Companies Act. In one go, you please suggest. Okay, because paucity of time, I have to tell you also.
Okay, so I will not go in detail. I will just put in some bullet points. So applicability of fast track mergers can be extended to some more type of companies, not only wholly owned subsidiaries and small companies, which will help achieve the corporate targets. Second is cross-regulatory approvals are already can be integrated. Say, for example, SEBI, RBI, stock exchange, depositories, ITs, all these cross-regulatory approvals, it can be integrated into one. Auto validation of all these basic details like PAN, DIN, ISI, it can be pre-filled based on the previous filings. One thing which comes to my mind is that certain forms are filed which are approved by the CRC and certain by the local ROC. There is no clear clarity in the sense which are the forms which are been approved by CRC and certain by ROC. If the government can give some clear-cut clarification that which are those forms, it will reduce the confusion. As far as the sorry, that's all. Okay.
Okay, Amit.
Yes, sir.
Yeah.
So on combined basis for all 3 areas, what comes to my mind as far as ease of doing business is concerned, although lot has been done by transition from MCA V2 to V3, lot of synchronization in the MCA e-forms has been done. But the way presently the forms are designed, what I understand, it's just a old version in the new platform. There has not been much of the overhauling in terms of the information requirement. right? They are designed with the objective of capturing maximum information, maximum data. Ye dil mange more wala concept is working more. So they want to extract maximum information. Instead of, they should go for an approach that they work on a requirement basis, as to they should first ascertain as to what is the objective of getting that form filed. And then we should have a mechanism to capture that particular information. And as many information can be auto-filled, pre-filled, that must come. But a thorough review is required as to what is the requirement. Secondly, can we also, because if we are going for ease of doing business, can we also consider a proposal that we give a small company a fixed amount, that let us say 5,000, 10,000 per annum, or maybe a digital wallet type of concept where we say that you pay this much on an annual basis. You need not pay form filing fees for each and every respective form. A wallet concept, that is the thought that I am trying to convey. Secondly, the requirement of approval of regional director or the other concerned authority for multiple processes where the shifting of registered office is there, because it really does not means now we are in a global era. So likewise, these processes where regional director is burdened with the review of applications for conversion, shifting, all that can be done away, right? Then restoration of companies which have been struck off for minor defects because they could not file the balance sheet, they could not file the document. So the NCLTs are burdened currently. Can we debate and can we bring this back to the registrar of company who can review the application, and on merit the application can be disposed of. Then registration of charges, if you see, which is now divided into multiple authorities. There is a registrar of company, then there is a National E-Governance Services Limited, which is a utility under Insolvency and Bankruptcy Act. Then there is a CERSAI. So there are 3-4 agencies who are parallelly required to be complied with in the given time frame. Why can't we choose one authority as a nodal authority for registration of charge, and information auto populates to the other authority, as we have done integration for BSE NSE filing? Something similar like that can be adapted for the purpose of that also. One more pain area, although lot has been digitized in case of a stamp duty payment in case of a company, but payment of stamp duty in respect of issuance of share certificate, especially in the physical format, those companies who are a small company, that is a pain for them, that they have to struggle with regard to the payment of stamp duty. And because there is a difference in stamp duty structure also, though Section 9 was introduced in the Indian Stamp Act, by which the amendment has been done, central duties there, but states have also prescribed their duties. Why can't be one common at the time of allotment only? The duty on the share certificate is also collected. Then there could be one area which can be of really help with regard to the micro, small, medium enterprises, right? Advocacy for their compliance, and especially carving out a window for compliance for the micro, small, medium enterprises, linking the concept of micro, small, medium enterprises, not only just limited to the MSME form, but also providing them the much needed benefit also in the concept of the Companies Act, though by and large they are covered in the small company, but bringing a specific window, I think that will help. On the infrastructure front and the uniformity front, I think one practice which we have been talking about a lot, that various benches of NCLT, various offices of regional director, various offices of registrar of company have a varied practice with regard to different corporate actions. And that's where matter are stuck for a quite a long period of time. I think it's a high time that ministry makes the processes uniform all across the country in the different offices, so that stakeholder really don't have to suffer. One major reform which we have though talked about in the previous Golden Jubilee seminar also of Pawan sir on 50th, I'm repeating it again for sake of bringing it back to the notice of everyone, that why is that requirement of newspaper publication, though it has been for listed entity minimized, why can't we do away with the requirement of newspaper publication? Why can't we have a dedicated platform, something like e-gazette notification, where you have to dump all your newspaper publication requirement over there, where there is a facility of enlisting and also there is a facility of search on the basis of various parameters, right? That will make everyone's life easy. Somebody who is a stakeholder, he just need to go to that particular portal. He will get to know what new information has popped up. People can subscribe. They can get actual notification as and when it has been made by the company particularly, or type of changes which are notified. I think that can be one major reform. One futuristic change which comes to my mind, small companies, especially the companies which are unlisted.
On 22nd of September.
Unlisted companies can be eased out a lot in respect of maintenance of statutory register. Now, all the information that you are capturing in the e-form is automatically capable through artificial intelligence to convert it into the form of a digital register. Why ministry is not creating the statutory register on its own on the basis of data submitted by the respective corporate? E-register window can be provided where login and password can be given to the respective company. They can verify those information maybe on a quarterly basis or on the annual basis, and those can facilitate even the inspection and the other things by the public and the shareholder also, because currently it is a burden also for the private limited company and the small companies how to maintain that, and also it will facilitate 100% maintenance of the record and register, and it will also ease out lot of hassle of the public and the shareholder in getting that information from the company. One last suggestion is with regard to the integration of various concepts across the different law. I will take one example, that is significant beneficial owner. Ankit touched about that. There are 7 different laws in country. FATF is one. FATF is the international concept, international body that has mandated each and every member to introduce the concept of significant beneficial owner. From there we are governed. Now in India, when we adapted different regulator adapted a different concept of significant beneficial owner. Companies Act has a different law. Prevention of Money Laundering Act has a different law. Benami property transaction has a different law. SEBI has a different law. FDI guideline, RBI, income tax is talking about a different framework. Why can't we have a uniform threshold? Why can't we remove the subjective definition like terms like control, significant influence, and bring a clarity to them? The complex structures which have been created in many of these legislations can be made uniform and clarity can be brought out, as Ankit was also suggesting. Harmonization is very much required, and more requirement is to have a centralized beneficial owner register, which is not there. And what about learnings of one regulator? What he has examined in one particular case, maybe the person was significant beneficial owner examined for income tax purpose. Whatever was the finding, has that finding been communicated to the other regulator? Perhaps no mechanism presently works. So the larger objective which with the significant beneficial owner concept was introduced in the India. This is just one example. Similarly, there are many examples. The alignment is required to be done. One last suggestion that also comes to my mind, although it's a very different concept, I am challenging the concept of a governance framework, which is presently in vogue in India. Because I am at forum where I can speak freely. So I am giving a thought, why not we revisit the concept of governance that has been borrowed from the foreign territory to India to suit to its requirement. I am giving 3 points to take away for consideration. Point number 1, foreign countries, the concept of ownership and management is different. Their owner are different, management is different. India is very different country where owner and management in 90% corporates are same. So having a separate watchdog as an independent director institution perhaps may not work for India as a whole. We need to, can we think of, I'm not saying I have something in mind to suggest, but certainly I can see last 2.5 decade, more than 2.5 decade, we have struggled in improving the governance structure. I'm not saying we have not reached anywhere, we have reached, but still, can we evolve something new? Considering that we are family-owned company where ownership and management lies with one person, can we evolve on something? With this thought, I think I'll take a pause and I'll be happy to discuss further.
Okay, Ankit, quickly, your
Sir,
point.
I don't have much to add.
Okay, now, okay. Yes, okay.
Yeah.
Ravi, any new point other than this? Then I will go to the SEBI.
I think only one, a slightly contrarian view to
Yeah.
what Amit was suggesting. Not in the sense that I'm against structural changes, but
No, you tell.
whatever change we should bring, it should not undo the work that has been done by professionals like Amit sir, you and regulators like Sundaresan sir over the years. Maybe and regulatory policy, as has been said by Supreme Court, is experimental. The policy work is experimental, but it should not be a dangerous experiment. It should not be perverse or without non-application of mind. So I see certainly many areas where his suggestions could be taken into account and some modifications or tweaks could be done. But to say that we should dump the existing structure as it does not fit, because the world data shows that more than 70% of businesses all across the world, not in India, are family owned. You go to China, you go to United States, these are family owned because family is the oldest institution in the world. It's no older institution than family in the world. So therefore, there are dividends of it and there are some dooms which arise out of it. Certainly, but otherwise, what we really need is to really bring our system not at the superficial level, on the tip of the iceberg, on the lines of e-governance, but also the 9/10 that remains submerged always and is not seen to the eye but creates a lot of problem. So the problem is not in drafting of the laws, but in the structural design that we follow, the method of enforcement and the method of investigation and surveillance that we follow. I think there we can really take a big leap. We are at inflection point with the advent of new age technologies, which are coming and amending at eye-popping and breakneck speed. So we should utilize that, and you should think of re-engineering the governance system rather than in the sense that rebuilding it. So that's my suggestion, sir.
Okay, Ankit. Okay, sir. Ravi, thank you very much. Now, sir, now, Sundaresan sir, now we are coming to the SEBI. So now I'm not dividing into this. So you just tell your point. Sir, though you have told a majority thing, but anything in this structure way you want to tell on change in law, ease of doing business, infrastructure, futuristic point of view, some changes you want to suggest, which you have not discussed earlier. You have to unmute yourself, sir.
Sir, I think I've more or less covered that whether it is a company sector, we have to move from rule-based to principle-based, and charging the independent directors for each and everything, there are a number of things, I mean, most of them are spoken about. And there is one independent charging, there is a section in SEBI which is creating the SEBI Act, which creates the problem, telling that all directors are responsible. That is the interpretation which have been taken. So whether it is an interpretational problem or a provisional problem that legal people have to decide and accordingly modify. Then regulatory predictability should be there. This I have been telling for quite some time that too many amendments should not be made even before one amendment is absorbed. And all the more when we want to go compliance to be done in a digital form using the AI tool and all, how fast you'll be able to make changes. And when you are using a bot, as the bot understood the earlier change before the new change is incorporated into that, who is going to validate that? And the next point is harmonization between across the laws. This is just creating unnecessary problem. And as recently RBI, I mean, it's not the first time, according to my memory goes, that a forum has been formed to rewrite the regulations. So there has to be a system to revisit the regulations once in 5 years at least. A complete, sort of a relook has to be taken, and one can come to the conclusion that there is no need to change anything. That is also fine, not necessarily that every time it should be changed. And there are a lot of things which are being pointed out to me as far as this ICDR is concerned. I don't want to get into each and every point because I'm not. It will not look like that. The concerned department people should not feel bad. They may also be watching it. So it is better that at macro level only I talk about. And I think, thank you for that.
Okay. Dhaval, now your turn for SEBI related thing.
Okay, SEBI related things, certain things I just wanted to highlight which came to my mind. Whenever the compliances are to be made under listing regulations, they are strictly time bound. Maybe it is 12 hours, 24 hours, 7 working days, 15 days. However, there is no approval timelines or certain approval processes for the regulators. So sometimes the regulator sends us an email that you are supposed to give the response by 5 p.m. today. You are required to submit the data by 5 p.m. tomorrow. Once we submit that report, there has been no response from the regulator. So many a times the situation occurs that we need to assume that the submissions which are made by a listed entity is found to be in order. This is what we need to assume, which can be sent by way of an email or some communication should be received from the regulator. Second is integration of various quarterly compliances. We file the shareholding pattern, corporate governance, reconciliation of share capital audit report, all we file. But there is a room for integration of all these various forms in one form. Alignment of many provisions of the Companies Act and the SEBI listing regulations is the need of an hour. We need to read both the laws simultaneously. Certain laws may be applicable under the Companies Act and certain under the listing regulation. So we apply the principle that the stricture of the law has to be followed. However, if there is some alignment, then it would be a great help to the industry at a large. Sundaresan sir has already spoken that the amendments are made very frequently, which do not allow a particular law to settle down. Though last point is with regard to materiality of events. So though many efforts are made by the regulator to amend the provisions pertaining to materiality of event, what should be covered, what should not be covered, how to determine materiality of an event. However, what I have seen, we also spoke to the peer companies, we find that people still find it difficult to identify that particular event would be considered as material or not. There are still room of interpretations that for me it is material. The same event may not be material for another company. So their materiality threshold limit uh, can be uniform across maybe all companies, or it may be sector specific. And for AGM, the other panelists have already spoken that instead of having a circulars every year, let us have a law which will allow the flexibility to conduct the virtual AGMs.
Okay. So thank you, Dhaval. Thank you. Amit, quickly, 5 minutes.
I have not much point. I think everyone has already covered. I just want to flag one point with regard to the reaching out to SEBI for non-compliances, especially the settlement order, adjudication order, and various other processes. I think this process, whatever I have experienced in the last couple of years, the processes are still not very defined one, and they are not streamlined. I think the institutionalization of these processes is required. Like the other quasi-judicial forums are functioning, and the clarity is there with regard to the adjudication process or settlement process or the other things, and the time-bound disposal of the applications is also made. I think because now everything is considered by regulator as a non-compliance, even if there is a smallest non-compliance, right? So there is a requirement at times that you need to go and get the offense adjudicated, compounded, or settled. So there needs to institutionalization of this mechanism. That is my only suggestion.
Sir, you are on mute, Pawan sir.
Ankit, you have any point on SEBI? Okay, Ravi, you tell what changes you require in SEBI law.
First of all, the settlement that Amit sir took. It needs to be more transparent and streamlined.
So
I think
it's not transparent. This is only calculation is there. You can do it. So what
on
is
paper, yes, it is very transparent, but how the process pans out in reality and on the ground, that needs to be more transparent and streamlined. The concept of negotiation of settlement amount on the ground reality, that needs to be really a forum where one can, the applicant who's going to settle, because after all, the settlement law was borrowed from United States, so that the regulatory energy is not wasted in going after people who are willing to come and settle and whose infractions are not having market-wide impact, or they are so severe in nature that there could be no settlement. So it was to avoid a necessary evil. But even that process has to be transparent. Even that process has to be streamlined. So therefore, real justice is done. And settlement is all about bargain and negotiation. You persuade the regulator about your mitigating factors. Also, the aggravating factors, and all of that are listed down in settlement regulation. There need to be a training and proper procedure on the ground for it to reap the benefits for it was envisaged. Number one. Number two, and this is most shocking. Even today, if you have to file an appeal in SAT, you need a demand draft from Nationalized Bank. NCLT has done it. You can pay online. All other tribunals, I'm not saying about every tribunal, but most of them have done it. In SAT, you still have to go through Nationalized Bank DD. And SAT lacks contempt power. CLB to NCLT in that transformation, NCLT got contempt powers. Today you have got a case, and I'm not taking the name, but case where foreign people are there. Now, how if SAT does not have contempt powers, you would running from pillar to post in a market where even microseconds and nanoseconds make difference if they do not abide by the directions of the tribunal. With boards, some kind of more teeth should be given. And apart from it, I feel the extension of the portal that exchanges use to identify the submissions of listed companies or intermediaries, that portal, as was extended in case of offer documents to the merchant bankers, should be offered to listed companies so that they can check their filings if they are ticking all the compliances that are expected by stock exchanges. Because under the aegis of SEBI, they have done a tremendous good work. Compliance culture is building. People, and certainly when there is a culture, people who don't want to toe the line, they would have some fear. That fear is necessary. But more than fear, what is necessary that there should be a robust and good, healthy culture that should be built. So for small errors, small infractions, there should not be these penalties which are straitjacket. I mean, this is kind of a slippery slope of fallacy where all or nothing. There is nothing in between.
Okay.
Either they impose the full penalty or no penalty. So
Okay.
I think their proportionality should be induced.
Okay, Ravi. Sundarshan sir, your point. and your point is
Some of them are not told is that, which I'm not sure whether my ex-colleagues will agree to that, the law of limitation has to be made applicable. You can't open 20 years back, somebody will come with a complaint, so then you open the file and then, nobody has to record. So limitation has to be there from the point of view of, even while filing a LODR, asking complaint from the time the company is incorporated. Some companies incorporated in 1960. Now, where will you go for that Form 32 or whatever form available at that point of time? If company is not able to produce, then there has to be alternate. You are making the person to go run pillar to post without knowing what is the solution. So the limitation has to be brought in for all those compliances from the enforcement point of view, for investigation, and there has to be time-bound things. Now, no application should remain pending for, I'm not telling this, many are pending, but there are situations where certain, the complaints are being received, that complaints are pending for, the applications are pending for a unreasonable time. So in order to ensure that such type of things do not happen, so there has to be a time-bound thing. And then many of them are, whistleblower mechanism in overall in the system has to be developed. Recently, what happened in a particular bank, we all know, but unfortunately, none of the employees, although bank is such that it is a very well governed and non-family owned, at least in the management, it is not that. Even then, one has to wait for 2 years for the episode to come out, and then so much of damage it caused. So whistleblower mechanism has to be strengthened to improve the governance. And then all new business models are coming. Are we, whether it is a in-house or some sort of training has to be involved to understand all these new models, whether it is in the, new intermediaries coming, or what you call in the IPO market, the new companies are coming out with. So as rightly said, one size fits all cannot be applied. ICDR, that's what I said, ICDR, LODR should be made principle based. You can't apply the same rule of a cement manufacturing company to a company which is simply says, I will make digital pictures and then do it. So these two are completely different. So there has to be some sort of as somebody pointed out, scalability. I also feel there has to be different size fixed for different people has to be there. That's all from my end, and thank you very much.
Okay. So, sir, now I think anybody is left out. Ankit, you want to say something? Okay, now. So, Sudarshan sir, your point is really valid, and the way everybody has mentioned, and I have noted down all the points, and it is recording also. So the points we will compile it. If anybody is not able to explain now or mention it, you can pass on to us. I'm sharing one questionnaire to the industry, and then I'm asking specific questions. So we will have more questions, more thing, and we can just cover up these parts and submit to the regulator or the task force which is working on this. So in my opinion, the way we have discussed, there are so many things required in change in law. And yes, so this message which we are compiling suggestions, whether it is coming from the delegate, it will go from corporate professional side, that we have organized webinar and other thing, and we have compiled these suggestions. Okay, so the major point which I have understood, that we have to do various things in the law, because law changes are required. Inconsistency we have to remove. Decriminalization process should be there, but simultaneously adjudication process is also very simplified. In SEBI also, the consent issue Amit and Ravi was mentioning, that is also there, that for everything should not be negotiation. You have to have, if a small violation is there, so you categorize on a small violation or serious violation, compliance, and then fraud thing, which you are already not doing. But whatever compliance issue is there, you just clear, just go pay amount and matter is settled. There's no need of any hearing, any things, any negotiation. But wherever a negotiation is there, wherever you want to discuss, you do it. And I think regulators should not negotiate. They should have a straight jacket, yes and no, and reject and accept. Okay. So negotiation should be separately discussed. There are so many laws which are overlapping with SEBI and MCA. That should be clear. And whenever we are making a multiple laws, so it is bound to happen that definition, point, comma, full stop, because as a law, we are interpreting in such a manner, kahan se, some lacuna we will get it in this definition, because one time we are supporting our client in this way, and sometimes we are supporting our client in another way. Okay, so we search this lacuna. So now lacuna should not be there like this. And the ease of doing business, it is right that we should make it clear that every things cannot come in one particular way. You have a startup, you have an MSME, you have a small company, you have a micro, small, various other things. Thing are there. You have a listed company, big company, small company. So for everybody should have separate things. You cannot put a Reliance in one pocket and the same a listed company of a small in the same way. So you have to make a difference. Then the merging of all the form and portal and simplified thing is a welcome. It has to be done by the government. It will help everybody that you are filing better, because I know now they have done the same thing and simultaneously, but I have seen that you have filed on BSC or NSC, but you have not filed on NSC, or you have filed in BSC, but some glitches were there, so it has not uploaded, and there is a penalty on this. So I think this is a wastage of time. And then the government, SEBI and the regulator should do one more thing. They should give a one-time relaxation to all companies, come forward like Lok Adalat, like the CAM. You just call that these types of things, you pay and your matter is over. So that way the pressure of regulator is also over. And I have seen SEBI is handling a case and then they have to follow principle of natural justice. If natural justice is not a principle, it is a just wastage of time by other way, and no doubt you have to follow. But under this protects, people are taking advantage. So we have to do something and we have to make this. Infrastructure change, one is very, very important, that all institutions should follow simple thing, and same process. So when the FAQ regulator is giving, why can't we FAQ for inter-institutional also, that this is the interpretation, you follow this. And the regulatory body, the appellate mechanism should also be increased. And the training of regulator is very important. And I will share with you with sir that whenever you are going for merger and the NCLT member is there, these people, and this is not their fault, they have come from different field. Now, if you have to do the merger and you have to explain that what is authorized capital and what is paid up capital and how this company will merge and how the network will divide, it is really a cumbersome process, because judicial mind is there, but these are the technical point. So their training is also essential. Whether it's as if 60 years or 30 years experience, 40 years experience, doesn't matter, because everything is new. Last point is the change. AI we have to adopt, digital things we have to adapt, and cyber security we have to follow. And then the way new things are coming, and sandbox concept Sundarshan sir was mentioning, we must do. If we have to innovate, we have to create our country as a more investor friendly and entrepreneur friendly, then you have to trust the investors, trust the entrepreneur, because by mistake, if he is doing some mistakes or violation, it is not something which is intentional. So you have to create intentional and unintentional, and then the gravity of the matter, everything should not be treated like in one jacket. So this way we can do it. Thank you very much to all of you. I will compile all suggestions, send it to the regulator or wherever the government is asking, and we will make it. And after circulating the questionnaire, we will get, I think within 3-4 days, we'll get more suggestion. And then these suggestions, which we will submit, I will share with all our panelists first, because something is there. We are not sending with anybody's name, but we are sending with the as a group. So something which you think the interpretation is maybe not what I wanted to communicate, you can modify. With this thing, I thanks Sundareshan sir for your lively presentation and visionary thoughts. Dhaval, you have come first time. Narayan, he was there, some emergency has come, so he has gone. Amit, Ankit and Ravi, thank you very much to all of you. And the way I told you that our knowledge sharing is continued, and we are working out, and we are just thinking that how we can be more reactive, more proactive. So multidisciplinary partnership, MDP, the government of Ministry of Corporate Affairs has asked suggestions, and we are having next program on this, and whatever 9 suggestions they have asked, on which we will discuss, and we will come out a strong solution and suggest them that why India should grow and how to make the MDP more stronger, more effective. Till then, thank you very much. Thank you, sir. Thank you, everyone.
Thank you.